We had a 21-year-old who had $1 million of our money. We've had a client who's bought a house, put on a mortgage with the money that they made on Axi Select. Only this month, there was a client at our third stage, so with $100,000 of our money, made a net profit of $200,000 that they took home. It just shows you what we are building and giving traders that opportunity, which doesn't exist. People are always focused on three things. They're like, how much is the registration fee? How much funds are you going to give me? And ultimately, how quickly can I move to the next level? How quick is it? What's the fund? What you're going to give me? Nobody looks at the actual conditions. You're ultimately not going to know what's going on. There's a spike. You get a little bit of a gap. You get kicked out the program. So it's naturally the way it works. It's going to cause a lot of churn. The one thing that people overlook in the prop firm space are the strict criteria that you have. Somebody can't trade over weekends. You can't hold over news events. You can't trade certain sizes, certain limits, daily drawdown limits, high watermark levels. So you've got all those restrictions that ultimately makes it a lot more difficult. Versus as a trader and your own account, you get to trade your own account. And that's where you get that appeal, the almost lotto effect, You go take a lottery ticket, you think, hey, this could be my time. It's kind of that feeling and that repetition versus a broker account, which is you've got to slowly, gradually improve and grow your account.
Welcome to Your Bourse podcast, where industry insight meets strategies to grow your bottom line. I'm Elina Pedersen, co-founder and CEO of Your Bourse, delivering the fastest trading technology for retail brokers. Today, we're joined by Greg Rubin, the man behind Axi Select, one of the most successful capital allocation programs for traders. Greg brings deep experience in prop trading and risk management with a focus on building scalable, sustainable founder trader models. Welcome, Greg.
Thank you, Elina. Great to be here.
So usually, Greg, we start with a little bit of a background and a bit more information about your career. So do you mind sharing how did you first enter the financial service industry?
So my roots to the financial industry is quite a vanilla story. At university, I studied finance and statistics, a business degree majoring in finance statistics. And I guess the interesting part, I was an avid poker player at university, and the transition from poker to trading, I still say it's almost the same traits that one needs. And ironically enough, I took my first job after university at a prop firm. But back then, it was a very different prop firm environment. That meant having to go into the office and trade the company's funds for the company, as opposed to now where we've got completely different types of prop firm or environment, should I say, in terms of that. So that's where I started out, and subsequently I moved on to commodities, equities I did for a bit, fixed income, head of trading for a couple firms, and which took us to today where I'm head of Axi Select.
So what led you into the prop trading and capital allocation space?
So what a lot of people don't know is Axi Select was, I'm going to say the first, but I'll say one of the first, but I'm pretty confident was the first of the kind in this space. And it was a vision by Rajesh to ultimately have an incubation program to really assist and help traders. And when I joined Axi, I was aware of the space, how it was blowing up, and ultimately saw a big opportunity to come in and create a program that was more utilizing our size as a broker. Right? We were the first broker in the space. And when I looked at the Axi Select program, in its core, it wasn't really commercial. It was more of a very sort of small scale program. And we took advantage of our size as a broker to launch a program that ultimately gives traders, it's more trader-centric, give traders looking for long-term careers a fair and transparent platform. And we look back 2.5 years now since launch, and we've got over 50,000 clients, and certainly making waves in this industry.
That's outstanding, really. For our audience, what is Rajesh's original title, CEO?
CEO. He's the CEO of Axi. And like I said, what people don't know is he had this vision before prop firms were even popular, before the first ones were even launched. There was an Axi Select program, which is very different to the one we have now, but the concept and the mindset or the vision was there before the space took off at all.
Was that when you joined Axi?
So when I joined Axi, I wanted to express the opportunity we had. We had a market that was really going crazy, and I didn't believe, and I still don't believe, the standard industry model is in traders' best interest. And we created a model that just as a between the prop firm and the broker space. And that's what we wanted to do, was to create a model that actually gives traders that, as we said, actually gives traders the edge, gives traders that ability in the market to really form long-term careers. And that's the model that we still operate with today, which is different to what else is out there.
Fantastic. Okay, so what do you find the most compelling about your role?
So I love the fact that it's dynamic. I mean, every day, especially in this industry, it changes very, very quickly. But if I had to pick one thing, we are generally changing this industry and changing people's lives. If I look at some of the feel-good stories, we had a 21-year-old who had $1 million of our money. We've had a client who's bought a house, put on a mortgage with the money that they made on Axi Select. Only this month, there was a client at our third stage. So with $100,000 of our money, made a net profit of $200,000 that they took home. I mean, started with $5,000 at the stage to take home $200,000 net profit as their payout for January. It just shows you what we are building and giving traders that opportunity, which doesn't exist. You don't really have that platform to be able to forge long-term careers and build. We're up to 12 or 13 Pro-M traders now. So just I spend a lot of time speaking to these traders and just to hear their stories, their appreciation for what we're doing. It's just awesome. Just great to see what we're actually doing.
This definitely sounds like a very feel-good role in comparison to some of the other roles potentially available in the retail trading space.
I don't think the word trading doesn't come with stress in any way, shape or form. But yes, the upside is certainly great. It's, to give that transparent, fair platform, and then to see traders capitalize and take advantage of it. Again, not every trader is going to make it to the Pro-M stage. Not every trader is going to make it all the way. I always tell you trading's difficult, but our job is to provide that platform and to give traders that fair opportunity. What they do with that is completely up to them.
So, Greg, today I want to pick your brain on the difference, in a way, between brokers, I can't say traditional prop firms, but challenges traditional prop firms, and how Axi Select is different, because I learned it from you that Axi Select is actually really, really different in terms of the accounts that are traded and the clients that you work with. So in general, when we start, how is the prop model different from the traditional brokerage model?
So if you look at the traditional prop firm model, it's simulated funds, it's demo accounts. You pay a subscription to take an evaluation. So you pay a registration fee, you take an evaluation, you then have to pass an evaluation. Sometimes it's 2 evaluations before you become funded. So you're not really ever trading your own funds. You're paying for the chance to trade the company's funds, versus if you're trading at a traditional broker, you have your own broker account, you're managing your own funds, you can trade it as you want to. The one thing that people overlook in the prop firm space are the strict criteria that you have. You can't trade over weekends, you can't hold over news events, you can't trade certain sizes, certain limits, daily drawdown limits, high watermark levels. So you've got all those restrictions that ultimately makes it a lot more difficult, versus as a trader and your own account, you get to trade your own account. Where the big appeal comes in, it's the ability in this space. One of the biggest problems, in fact, I'm going to say the biggest problem we have is that retail traders are under-capitalized and they try to trade too big leverage, take too much risk, and ultimately blow accounts. So when you have a small amount of funds, the opportunity with the prop firm, or the potential, I guess, or what gets sold, is you could get access to sums of money that you wouldn't be able to ordinarily get. And that's where you get that appeal, the almost lotto effect. You go take a lottery ticket, you think, hey, this could be my time. It's kind of that feeling and that repetition, versus a broker account, which is you've got to slowly, gradually improve and grow your account. And if you lose, that's your money. But naturally you go up, you go down. Whereas the prop firm, it's binary. You're funded, you're not funded, you're off the program, you're restarting. So very, very different circumstances.
And how is that different from Axi Select?
So Axi Select is 100% free to join. What we do require is traders to put their own funds in their own Axi Select account. So the beautiful thing about Axi Select is ultimately, as a trader, you do exactly what you do. So how it works is you trade a real life broker account. We set up an account with our money in that trades parallel. And the higher you get, the more funds we put into an account, up to $1 million at the higher end. But where the difference comes in is that all you're doing at Axi Select is trading your broker account. So if you lost money at your broker, you'd lose money on Axi Select. If you make money, you get paid what you make on Axi Select plus the money that we put in on top of that. So there's actually no downside for traders who are trading at other brokers. Of course, there's downside if you're not trading, you join Axi Select and you lose money. You can lose money. But what we're saying is if you make money, you get paid your money plus our money on a real life trading account. And that's why it's blown up or gone crazy in the broker space, because it just makes sense for traders to get that, especially in today's environment, to get that extra, something that you don't get elsewhere. But on top of that, we don't call ourselves a prop firm. We don't call ourselves a funded program. Yes, we provide generous funding, but we have education. We do weekly webinars. We have a live trading room with professionals in there providing analysis. We've got education centers where we have videos, libraries where we're busy creating sort of, tests at the end of modules, should I say, in terms of once you do it, learn module, pass the test, become qualified, improve your trading. We have an edge score, which is a score which we use to judge your trading performance and to assist you in what you're doing well, what you're doing badly. So it's, in a simplistic form, it's a real life broker account that you get access to extra funding. And if you want to add the bells and whistles, you also get to improve yourself as a trader and the ability to be part of a community, to be part of a trade room, and to have direct access to professional traders.
Does that mean that everyone who joins Axi Select is automatically funded, or do they still need to go through the evaluation phases?
So we don't have evaluation phases, but what we do require to qualify for the program is to place 20 trades and have an edge score of 50. And the edge score is how we judge you as a trader. So you have to place 20 trades. If it's above 50, you then have to deposit a minimum of $500. So if you deposit $500, have an edge score of 50 after placing 20 trades, you're then on the program. So again, we back our top traders. So it's important for us. This is not, receive registration fees versus payout. We need to see that you can trade. We want you to be successful because ultimately we're going to back you with real money. So it's very important for us that we see your performance. And that's why the criteria is in terms of every stage, how many trades you need to place, because we need to see over time you can be consistent, you can make profit, and you can meet, especially the risk criteria, which are super important to us in terms of being able to manage money, manage risk, manage a trading account.
So let's say I've passed that $500 threshold. Will you match it with $500, or is there more money that I'm getting from Axi Select?
So when you start at the first stage, it's $500. We put $5,000 into an account, and then you got to meet certain criteria. The next stage, you can put a maximum of $2,000, and we'll put a maximum of $20,000. Then it goes to $100,000, $200,000, $500,000, and $1 million. It trades at a multiplier, right? So if you just look at the first stage, if you put in $500, we put in $5,000, it will copy it at 10 to 1. So if you buy 1 lot of gold, we'll buy 10 lots of gold.
So obviously Axi Select is run on live accounts in a live environment. Why was that an important design decision? Why did you choose that over a simulated environment?
I mean, if you're offering a trading program, you've got to give a live environment. I mean, you will know in your line of work more than anyone the difference between a demo account and a real life account and execution and trading costs and how the real world trading liquidity actually works. Often it's a shock for people when you actually go into market and you're placing trades. They go, well, hang on a second, that's I don't know that's how it worked, because you're so used to that demo account environment. So absolutely, it's very important to offer a trading program with real life accounts. I mean, I can go into many risk reasons and factors on how it works on a demo account, but the gist of it is a real trading program is going to be real accounts.
And another question that I'd like to ask is more of like a bit of a marketing aspect to it. Do you think that, because obviously I can see a lot of brokers using prop trading as a marketing activity, right? Would you say that it can be seen as a marketed activity in the brokerage space? The standard CFD traders more difficult to retain, or like, would prop traders have a higher churn? What would you think? What's your experience?
So prop traders churn will most certainly be higher. It's just the nature of the beast. You're paying a registration fee and you're ultimately getting an account. You're on the program, you're off the program. You can see the percentage of traders who pay registration fee who don't qualify. It's very, very high. And I think the problem that we have in the space is people are always focused on three things. They're like, how much is the registration fee? How much funds are you going to give me? And ultimately, how quickly can I move to the next level? How quick is it? What's the fund? What you're going to give me? Nobody, and what's my percentage payout, right? Nobody looks at the actual conditions. It's all very well me saying to you, here's $1 million. You can keep all of it, but you can't trade over news. This is the most you can lose in a day. You can't trade that. You ultimately not going to know what's going on. You get confused. You get an email that kicks you off the program. You're like, why? I don't know. There was a news event at 10 o'clock in the morning, or there's a spike. You get a little bit of a gap. You get kicked out the program. So it's naturally the way it works. It's going to cause a lot of churn. And if you do trade your own money in an own broker account, you are going to ultimately be a little bit more careful, more cautious. So without doubt, the churn rate will be higher for prop firms.
So I assume broker clients are a bit easier to retain then?
In theory, you would say yes.
Okay.
But the one thing, again, it's, going back to that lotto effect. If you keep buying subscription, it only costs you a small amount of money for potential big accounts. So you buy, you lose, you lose, you lose. You do get that feeling you are going to keep trying. And that's, I guess, what a lot of these firms rely on where the hook is. A lot of traders at prop firms are not used to managing large sums of money. So you might buy a registration fee, fail, finally pass, and then lose your money. You go, oh, I had access to such large sums of money. That's quite appealing. Let me try that again. The problem, and this is where the hard realities come in, is when you look back in 2 years' time and you say you've been spending $200 every month on a prop firm challenge, where you think, well, actually, I could have had a bankroll had I just traded at a broker. So I could see both sides of the equation. So in theory, yes, but in practice, a lot of where these models gain traction is the fact that once people get access or that chance to manage large sums of money, it's often what keeps people coming back for more and trying to sign up for more challenges.
I think when the few opportunities that I had to chat to prop traders who've decided to become traders, they would always say, oh, I've done 10, 20 challenges. I went in the funded phase and this is what happened. But I feel that I am being limited by the challenges and the rules. So that's why I want to do it myself. Now, not all of them are successful at the end of the day, but then they realize that they need that freedom in order to perhaps take different decisions or a different approach to their trading.
Yeah, I take my hat off to traders who make it in the prop world, because it is difficult, to have all those rules and restrictions and daily limits and daily levels. It's very, trading's difficult as it is. When you start to add all these complexities and rules into the mindset, it's naturally going to make it more difficult. So, I can see where the appeal is. There's certainly a market for it. It's a growing market, and traders who are successful have made a lot of money, which is great. But sadly, the great majority of traders ultimately are not making money on these prop firms. And it's one of the reasons we become very popular, but it's also, unfortunately, the core model is registration fees in versus what you have to pay traders when they make profits. Now, hats off to certain people in the space who have been helping to improve the risk management and offer risk management tools. We have seen that. So it's not every firm is just that. The industry is moving more towards having more sort of risk controls. But for the most part, and the general thesis right now in the industry, it's front-loaded the revenue coming in from registration fees, and that has to pay the traders who actually make money.
So, when we look at businesses, and when we look at different clients, so obviously we do that as well as a technology, we always look at the lifetime value of the client. And when I was managing a brokerage firm, again, we would always look at the lifetime value of the client. And if I understand correctly, then the brokerage lifetime value is very different from a prop lifetime value, because prop lifetime value is more of a marketing concept, if that makes sense, the number of challenges that you could sell. How is it different between the brokerage, Axi Select, for example, and a traditional prop firm?
So the lifetime value for the traditional prop firm, it is as many registration fees, upgrades, retries that you can get up front. That's ultimately where all the revenue is captured. In terms of a traditional broker, well, everybody manages flow differently, but ultimately where brokers win is where they have long retention of clients. Clients stay there for a significant period of time. They're prepared to grow with the broker. There's a reason to stay with the broker, and ultimately they have many years with the broker, and naturally
paying the spread, trading more.
Right. Well, however you monetize flow, is you still benefit from having traders on the program. So in terms of Axi Select, as I said, where we're very different is we are a broker, Axi, and we have a big trading team and a risk team, and ultimately our job as a broker is to manage flow. And that's how we treat Axi Select. So we actually back our traders. I'm not saying we back every trader. We've got an edge score that tells us what traders' performance is. But what I can say is all the top traders are all completely backed. So we can say hand over heart, we need our traders to make money, right? If our top traders make money, we make money. And that's something very different to the space as a whole. So we're not here just to collect registration fees to see traders lose. It's in our best interest to provide education, provide the learn tools, give traders that path, and ultimately let them go become profitable and make money. Because when they're making money, then we're making money at certain intervals.
Okay. Obviously in the brokerage space, and especially on your Bourse podcast, we often talk about the trading activity, what kind of traders and the trading activity can be classified as toxic trading or abusive trading. I think this is probably very different between a brokerage firm and a prop firm. I would assume that toxicity in a prop firm would be something about being able to go through the evaluation or through the challenges somehow not based on game of skill but on other tools. But I was thinking maybe you could tell me a bit more about that. What would be the toxicity in the prop industry versus a brokerage industry?
So the prop industry is not immune from the standard broker practice as the latency, the play on pricing, the scalping that you see. But where the prop firms get a lot of, and this is Axi Select included if we put ourselves in this bracket, is the abuse that comes from hedging, match trading, as we call it. It's very difficult for one big account to go long on one broker, short at another broker. One account blows up, the other one makes money. Even within the programs, you see a lot of traders who will naturally, two people taking accounts sign up. So you do see a lot of that, and it's something that a lot of the prop firms on why they've struggled in terms of margins. It's having that ability and those risk management tools to be able to pick that up. Again, us being a big broker, we have an advantage in that sense, but it's not to say we're immune from it at all. We get a fair share of it, as do many prop firms. So that's a big challenge. In terms of copy trading as well, you see a lot of accounts, especially with the world with EH, you see a lot of accounts that are linked together, trading together. So there's that sort of side of it that you wouldn't naturally, there'll be no reason to get in a normal broker. So I'd say the big one is the match trading and traders trying to collude together to take advantage of the challenges or for a prop firm, or in our case, take advantage of our performance fees.
I think traders who try to do that do not realize how easy it is actually to identify those connections, if that makes sense, not just by the trading behavior, but by other things.
So I wouldn't say it's that easy. It's taken us a lot of time as well and effort to, and invested in a lot of technology to be able to do that. And I wouldn't say that it's a common practice. Yes, prop firms as a whole are getting more sophisticated, but so are the abusers and the type of things we see. I mean, I've seen some crazy. When you pick it up, I've seen some crazy plays, and sometimes I've even said I take my hat off to people for what they've thought of the creative methodologies to pick this up. I'm not going to go mention them now, but it's sort of very creative ways to form synthetic positions to create same positions. It's crazy how far people will go.
I think that's where, again, Axi Select is different because you do have that knowledge from the brokerage space. And I mean, we focus on that a lot as well, grouping accounts by IPs or locations or the trading behavior, things like that. But it's all very brokerage inheritant, I'd like to say.
Absolutely.
I'm not sure that standard prop firms have ththose tools or realize that this is what they should be using.
Yeah, and it's been a problem. Because once you get abusers, you've also had quite a lot of firms that pay, so margins have been less. There's a lot of promotions going on, buy one, get one half price, get a refund if you lose, or if you pass, get your money back. So margins are being cut and abuse has risen, which is why you've seen, a squeeze on this industry, or you're seeing a lot of the smaller brokers struggling to keep up at the moment. And it's, a big part of it is what we are seeing with the abuse that we're getting. The revenues aren't quite as prevalent as they were go back 2-3 years ago.
Which regions would you say are is prop trading most popular in?
So if you look at prop trading as a whole, you would say US, Europe's very big. Axi Select, we use live accounts. We don't have any affiliate. We don't do any business in the US. So it's not from our side, but general prop firm, big in the US, big in Europe. I'll say those are by far the two biggest regions for your traditional prop firms.
Do you think that's because historically those regions understand what real prop trading is, or is there another reason for it?
Well, I mean, America is just very big, and it seems to be a very big population who trade there, right? It just seems to be quite popular. And that's where a lot of firms did operate there, then couldn't operate there. But with the demo model, simulated funds, you got more opportunity, as you like, to operate there. Now, it's still not that simple because we know regulations around CFDs and there are many other regulations and why a lot of brokers don't operate there. But yeah, it just seems to be by far the biggest market in that sense. I would say the UK, Europe, we take Europe as a whole, I would say the UK as well is also a very big market for prop firms. And in terms of financial hubs and trading, it is certainly a big region. So it's not a surprise in that sense. But again, prop trading, or the term is quite a vast term, has become very popular globally. So it's not just, it is spreading out to other regions as well, but the interest there is incredibly strong.
Okay. Another thing that I wanted to chat to you about is actually the whole marketing of those challenges. And in general, I know you do it slightly differently because Axi Select, again, is linked to a brokerage. So you have more tools, right? So back in the day, we were and now if you're regulated, you can advertise in different media, right? But for prop firms, they don't really have that ability. So I think it was the moment when prop firms started attracting clients is pretty heavily correlated with the rise of all the Instagram and TikTok influencers who technically don't have the right to be offering those financial services or promoting those financial services. But of course, they are also motivated to do so. So could you tell us a little bit about marketing in the prop space?
I mean, I think you hit the hammer on the head without even saying it there with the sort of tone and the messaging. Yes, it's very aggressive. It's very much payouts, performance, this person made that, influencer heavy, selling results. The UGC content is sort of completely taken over, and it's this person received that person received that. It's quite in your face. It's quite aggressive, and I think one of the reasons for that as well is a lot of the models are pretty much the same. They're pretty similar. So you're not new features or different features that you can really promote. You can really promote performance and results, whereas your traditional broker marketing, it's more about trust, showing longevity. It's building that brand to show on why you've been around and who you associate yourself with, and because with the space, you got people trading from different countries. You're putting money in to accounts. You want to make sure this trust, the firm's legitimate, and that's one of the most important factors. And you see a lot of that in terms of who brokers partner with and how they build that image. Whereas prop firms, as you say, it's very aggressive and just numbers and performance.
Is it very different how those influencers are rewarded in comparison to, I don't know, more traditional introducing brokers that have to be regulated, let's say in the UK or US and Australia as well?
Yeah, I mean, again, if it's demo accounts and it's simulated funds, there aren't any regulated rules as far as I'm aware. I mean, I haven't operated in that space, but my understanding is you're a lot more licensed because you're not selling or you're not promoting a regulated product. In terms of brokers, especially in certain regions, you can't market. In certain regions, you've got heavy restrictions. So without doubt, it I won't say opens avenues. It's not the right way of framing it, but it gives you more room in order to move. And you can see that in terms of the actual content that is being put out. But even from a broker's perspective, you're showing results in terms of execution. You're showing results in terms of your story. You're not looking to, what are you offering as a broker? You're offering a fair and transparent, good trading environment. You're showing your spreads if they're good. That's what you're giving the trader, whereas the prop firms are trying to show that we give results, we pay out. So very different ethos and very different, I won't say different industries, very similar industries, but very different paths to ultimately generating profits in this space.
So we've learned about Axi Select. So in order for me to be funded, I need to deposit $500, get 50 points, and I'm good to go. And I know that there is an opportunity to get more funding, but I'm just wondering about like traditional firms. If you don't mind sharing, how are the challenges structured and what would be the most important parameters the prop traders need to be looking out for when they buy those challenges?
Yeah, so we touched on this earlier on, but it's very important to mention that again. And it's the big problem is when you look at the firms, you're looking for where's the subtle differences. And the difference is the amount that you've got to pay for the account size that you get. What percentage of profits are you going to pay me? And the problem with that, again, is I'll say a high percentage of traders do not even look for one moment what the rules are around news, daily drawdowns, high watermark levels, holding over weekends. And again, that is the most important part, is your trading conditions. If you have bad trading conditions, it doesn't matter about those headline figures. So it's absolutely paramount that you understand what you buy and what are your trading conditions, because that is what's going to make you money. You're better off taking half the money, half the percentage, and having trading conditions that are realistic to generate profits versus seeing those big numbers and, the ability to earn so much. And I think that's something to be careful for sure, and something that I would say should become a factor any time you look to join a traditional prop firm.
Do you believe that harder challenges actually create better traders or just fewer customers? Or do you think this evaluation stage is reasonable?
I'm going to say fewer customers, and I'll tell you why. Because define harder challenges. Is it more stringent rules and conditions? Is it harder? Is it, more terms, more hoops to jump through? Because ultimately it's difficult enough. So I don't think you're a better trader if you now can't trade on weekends, or you can't use an EA, or you have a high watermark level and you got trading drawdowns or trading stop losses. I don't think that makes you a better trader. It just makes you having to jump through more hoops. So when you look at the space, the programs are generally quite similar. They're very, very similar structures, and there'll be a few changes here and a few rule changes. So I think, yeah, it's very difficult with such competition to get away with creating harder rules or excessive. They're all hard, but there are some that do have a couple more. But ultimately, with the competitive landscape and, brokers entering the space, it's become very difficult. And, I touched on earlier, the margins have been squeezed because of that. You can't just have all these crazy rules, or somebody will undercut you. And that's where the industry has raced to, and why we're seeing, in my opinion, some consolidation in this space.
So in terms of those challenges, how much slippage would you think is acceptable when those clients are trading, and how much of it is outrageous when we look at, let's say, asymmetric slippage, something that is frowned upon in the brokerage space?
I mean, if you're taking challenges and you're on demo accounts, there should be no slippage. Now, I understand that they tracking prices and they try to give some sort of that feel, but I have a very different take on this whole symmetrical, asymmetric. The truth of it, even if it is symmetrical, most traders will lose from that. And why is that? Is because many more traders will have stop losses in place versus have target prices on an automated level. So when your stop loss gets hit and you're going to get slipped, it's going to affect you a lot more than when you have a target price and you might get that extra. So although I know a lot of brokers like to show those stats of the differences, well, look, it's actually net positive. In reality, for a trader, it just isn't. Very few are going to benefit from it. That's the honest truth. So I don't know about the symmetrical, asymmetric. In reality, it has to be symmetrical, but it doesn't work out like that. So my argument is, and you'll know this better than anybody, if you've got good liquidity and you are going to market, then the slippage should be minimal. But if you are trading illiquid times of the market and you are placing big orders, naturally, and you trade real life conditions, you are not going to get the exact price every single time. When traders trade on demo accounts, or I guess B-book at smaller brokers, they get used to this being the real life environment. And it's funny that they expect this to be the constant, that I hit the price, I get that price, because that's how it works. That's what they used to, And, we had a trader we bought $22 million of gold and it was illiquid time, got a 40-cent slip and couldn't understand why the price was different. I'm like, that's a pretty big size of gold in liquid time. I think that's fantastic execution.
Yeah, exactly. That's what I wanted to say. That's pretty good.
But again, and this was a large order to one of our pro-M traders, but even someone who had made it to that stage was so used to having perfect liquidity trading on B-book or trading on demo accounts. So, to your question, if you are running a fund on a simulated account on a demo account, should there be any slippage? I don't know.
I think it's a bit, to be honest, and this is in the brokerage space, that's also personally, I believe, a big issue. When the tail is wagging the dog a bit, when the brokers start advertising those unrealistic conditions, zero spread, zero DAT, swap free, whatnot. And that's when the traders start to expect those unrealistic conditions. Meanwhile, they need to understand that if they are to be executed appropriately, that's just not impossible to get that anywhere. So there must be B-books. Like, there is no other way around it.
That's a great point. That is a great point. This race to the bottom of spreads being almost raw across the board or very close or very tight. You place big orders and actually going to market, you just can't guarantee that execution. So you're absolutely right. Anything that gets promised like that, it's certainly not going to the street.
I think personally, I was really excited when you've launched Axi Select, when some of the other large prop firms emerged, because I thought it was a bit of a revival of retail trading. I think it attracted a lot more younger traders to our industry, and it definitely broadened the trading ecosystem. Is that the experience you've seen as a broker at Axi? Do you see that migration between the firms? Do you see prop traders migrating from other prop firms to Axi Select? What's your experience?
So our timing was opportunistic. We launched September the 4th, 2023, and it was the day or two after the MF news broke. And we had this alternate model to the prop firm, the solution to the problems in the space. And by chance, we launched as we saw the pinnacle, we saw the start to the change in this industry. And there's good and bad to that. I mean, obviously it helped us sort of gain a lot of traction, but we were perceived as an alternate to the prop firm space, which was also one of the angles that we were going for. But the first year or two, we had many traders join us who were trading at other prop firms because they had an opportunity to trade a more trader-centric one. And for me, when we built this, that was always the one side of the market, but the other side of the market was to revolutionize the broker market. Because in essence, you're still trading a real-life broker account, you just get the benefits. You take the same downside, but you get the benefits to the upside. And it was only maybe 7 months ago we started sharing that message more when things sort of settled down in the prop industry. And we've just seen a huge number of traders sort of have that aha moment, sort of click, oh, hang on a second. You mean I can still trade my broker account the same way? I don't even have to look at the allocation account, the account of our funds. I can just trade. At the end of the month, I see my balance and I see, do I get money from Axi for my performance? So there is an element, and we've made some huge strides in terms of the broker space, but kind of getting that message out there that we are very much not a prop firm. Yes, we've got good funding and generous program offer, but we are a lot more than that. And that's where I'm very happy to see that message is resonating in the broker space now.
I think in life, we make choices and we all pretty much know what's a perfect partner for us, a perfect client. And I think it's not only traders selecting the broker or a prop firm, but it's also the prop firm knowing what their perfect trader is. For Axi Select, what would that individual be?
So again, one of my frustrations, I guess, is sometimes we perceived as a program for experienced, advanced traders because there's an edge score and there's large sums of money, so it must be advanced. And it couldn't be further from the truth. I said, I'm a trader. For me, I found my groups. I started in 2007. 2011 was when I really found something that resonated with me. And I was part of a community. I was part of a group. And when we built this, we thought, what do traders need? And that's where we got the trading room, the webinars, the access to direct traders. it was all that points to say, why do traders blow up accounts? Because they trade too big a risk, they take too much size, they lose money. It's only when they realize or learn risk management and the trade psychology that goes with trading do they actually find their groove. So we thought, well, if we could stop people blowing up accounts as best possible, to give them that education up front before they have to go through it the hard way. So one of the main points is we wanted to attract new clients and say, don't go down that route that most of us had to go down of blowing up accounts, not understanding how trading works, trading crazy size, huge leverage, and get the grounding right from the beginning. So when I hear Axi Select is for experienced traders, it's almost certainly not the case. And yes, it's appealing for experienced traders, but ultimately there's an education side to Axi Select to help you learn and become better traders. The Edge Score explains to you your reason and why it's low, what you can do better, how you can improve your performance, what's causing your performance to drop. So we have that analytics on your trading at the same time, whilst giving the funding, because the more you learn, the better you get, the more funding that you get along the program. So it's true. It's absolutely for all traders. It's for traders who want to trade. It's not for speculators, right? If you want to speculate and you want to take high risk, then you're better off on a traditional prop firm, which gives you that opportunity to have big hits with small sums of money. But if you're looking to really become a trader and commit and go down the path of Axi Select, you'll be rewarded for performance, and that's shown with our traders who have been with us and sort of advancing.
Great. And as you've mentioned, you are funding a lot of traders. And I'm just wondering, and again, the reality is, unfortunately, it's still that 89% of clients lose their money, right? Even in the brokerage space, they blow up their accounts, as you have mentioned. And I assume that from time to time, it does happen that you fund traders that end up blowing their accounts because it's not their money. You know, they can be a lot more opportunistic when they trade. So how do you balance that, providing that opportunity to traders with long-term program sustainability to make sure you can actually continue running it?
Yeah, great question. And don't forget, we launched this model as the first of its kind, still the only of its kind. So obviously there were learnings for us. We didn't know for sure exactly, we did our back testing, but ultimately we also learn and we sort of see how things work. So we have had to make a few tweaks, and we're currently in the process of making a tweak to the program to make sure that it is sustainable. So it absolutely is imperative that we look after the program while still providing transparent terms, fair playing field for traders. And I think that's kind of key. If you look at Axi as a broker, how do brokers make money on a high level? It's attracting clients to the company to trade with us, right? Once you trade, you join the ecosystem where the clients make money or clients lose money. The broker ultimately makes money, as there are fees involved however you manage flow. So the beautiful thing about Axi Select is for traders, there's no downside because you're trading anyways, right? So despite the success on Axi Select, it's attracted a lot of people to our ecosystem. And one thing we pride ourselves at Axi is our offerings. We have a crypto offering, we've got a perp offering, we've got our own internal platform, our own proprietary trading platform, ATP. So we've got copy trading, we've got a lot of tools that traders find appealing, and they learn about Axi through Axi Select, and they become part of our ecosystem. So in that sense, from a business perspective, it's been fantastic. But in terms of the actual model by itself, absolutely, it does need to deliver both. And again, I don't want to mention it again, but as a broker, we manage flow. If we can't manage flow, you don't have a broker in terms of that. And actually, without Axi Select, has significant amount of volume that it deals with on a daily basis. So fortunately, we've got those tools in place to manage it and to offset risk.
And I must say, you as a broker, your team is outstanding. You definitely have some of the best people in the industry. I loved learning about Axi Select, and really, I think you're doing an incredible job for traders and for this industry. And it's really rare to find people who actually do that, because usually it's the opposite. It's people who cause more damage than more destruction than building the industry up. Before you go, I just have a few questions, and I always ask them. They're more of a looking ahead questions. And I'm just wondering, based on your observation, what's the hottest trend in the trading industry right now?
Gold.
Fair enough.
And I'll tell you why. I still find it quite interesting. Is how many people are trading gold right now? I was head of trading for a metals firm, and it wasn't the most popular asset all those years ago. Now it seems to be the best thing out there, and I think a lot of it has to do with FX. The FX industry's gone very quiet, and we're seeing a lot of concentration amongst brokers, amongst prop firm trading metals and gold in particular. So from a product perspective, it still surprises me how popular gold is. In terms of an industry, I would say the use of EAs, use of technology, more and more traders are going to automatic trading right now, which completely makes sense with where the ability to backtest, to get your stats, to see other performance, to review your performance. So we are seeing a lot more traders trading automatically. We're seeing event contracts becoming quite popular, coming back into the space.
I wanted to ask you, what's your take on predictive markets?
I mean, it seems almost binary options repackaged.
That's how I feel.
But it is starting to take off, and we are starting to see a lot more events of such, or more firms offering it. And I think it talks to the bigger picture. We're seeing almost an amalgamation of all the different types of trading firms, crypto firms buying brokers or bringing brokers into the mix. We're seeing prop firms buying brokers. We're seeing a combination of everything kind of coming together, and it's quite interesting that event contracts has popped up off the back of that. So I think the industries are almost, I won't say merging into one, but there certainly feels like TradeFi and the crypto world are starting to become a lot more aligned, or firms are offering all as opposed to one or the other.
With Trump in the office for the next 3 years, I'm not sure how predictive can the predictive markets be.
At least they binary. At least it's one or the other. But again, I mean, the predictive markets are absolutely loving having someone like Trump in the office, to seeing that volatility that's coming off the back of it. It certainly has created a market.
All right. Thank you very much, Greg. This has been invaluable. I think it's one of our best prop trading podcasts so far, if you will allow me to call it that.
Thank you, Elina. I appreciate it. Pleasure to talk to you, and look forward to doing it again sometime.
Great. Like, share, and subscribe, and stay tuned for more podcasts.